Hello ladies and gentlemen, and welcome back. In today's video, we discuss everything to do with the markets right now, including the key supply and demand levels that are leading up into one of the biggest news rollouts that we've seen in some time. But I also want to discuss 4 times since 1929. Yes, we've entered the history books again in 2022, and the results of what happened during extreme periods of volatility for a long time could shock you. Yeah, unfortunately, it's usually meaning more pains to come somewhere around the corner. Let's talk about everything though ahead of the 4 big bits of news that are coming out this week. It's going to be a big one. See you soon. Well, welcome back everybody to the Daily Show where we discuss stocks, commodities, and cryptos. We've got that, the macro data, the big news events leading the way, and of course the key levels we should be watching right now coming up. Institutional traders spend another record amount on hedges. No surprises here. It's been the story of the last couple of months. We've just seen more and more and more protection being put in place ahead of the big inflation numbers, the CCP meeting that happens this weekend, remember October 16th, and also, of course, the earnings season coming up in the US. Will it be shocking or is it going to be in line with expectations? So, one of the most persistently volatile periods in generations. We've entered over 250 times across 7 timeframes here of 1% daily moves or more. We've entered into a period that is incredibly unique, and unfortunately, we're going through this all now together. You can see the reads here. We're over the 250 barrier, and this puts us into periods such as 2008, 2002, 74 and 1937. So only 4 other times has this ever happened. Then the question becomes, what happened after we got a reading like this? Was the worst over? Well, here's the good news and the bad news. It wasn't over yet, which is the bad news, but the good news was it was close-ish to the bottoms. S&P 500, after the equivalent time periods with 1% swings across all 7 time frames, we saw weakness kind of come through over those next couple of months, followed by a very strong 12-month period. For investors, potentially they might be looking at this saying, oh, thank goodness, we might be able to get out of it in 12 months. 100% of the time after seeing such volatility over a huge period of time, we tended to come out bullish over that next 12 months. So while the pain was there, as you can see here, it did get better. So these are the reads after what happened in terms of after that 250. 2002, we saw a decline that was more than 15%, but that was backed up with some green bullishness after. 1937, we see a lot of chop market followed by a new capitulation low. And I think the story here was in all of these cases, we still had a little bit more to go down, but more importantly, in 3 of these cases, we had a maximum fear event, a capitulation that pushed the markets to an extreme zone. Usually that means we're going to get a VIX or a volatility index over 45. This is one of the big readings that a lot of people are going to be looking for to signify a potential bottom is in these markets. Let's talk about S&P 500 from the positive side though. We're in week 2 of these figures now. Week 1 is horrible. Week 2 tends to bring the bulls. This is when you have 5-to-1 over back-to-back days of New York Stock Exchange stocks going up. We tended to see a decent amount of bullishness. We'll just quickly run through these figures because we've used them. Again, week 1's now over. That was negative. Week 2, we're in at the moment. This is after back-to-back days of volume thrusts. Again, a fairly rare reading. We've seen that again. We've had 100% bid rate as well last Tuesday for the Nasdaq. Again, a rare signal. There was still usually a weakness to come, followed by strength. If the news goes the way of the bulls this week, this could all come through. And then we have smart money versus dumb money, the ranges between them. We often saw that when we saw these huge discrepancies, we were at least temporary lows. If you look here again, the statistics, week 1 is over. We're in week 2. So there's some positive stats here, potentially moving forward. The negative stats really lie around the utilities from the previous video we discussed, and the chance that this news goes badly. 4 big events. If they all go badly in one, yeah, you're probably looking at some form of capitulation fear where markets could tank anywhere upwards of 10 to 15% very quickly. Unfortunately, that is the type of market we're in. If fear grips the street, usually it gets really bad. If anyone's been trading since at least 2019, you would have seen 2020. If you've been trading longer, you would remember the GFC, you would remember the crash with the European debt crisis, all these types of things. S&P 500's around this time of year since 1931. As we see midterm election years, that's this year, we tend to go bullish, and during most years we tend to trundle down to the end of October and get that turnaround into the Santa rally, that December-November period that tends to be strong. Here's 200 years of economic data in terms of the big bear busts and how long they usually go for. Pause the video if you're interested. And as per usual, we are here, probably around here actually, of the S&P 500 2008 to 2022, the most closely correlated market to where we are right now. We either I guess you would say float or potentially sink with the news that's ahead. This could be one of those big weeks where we have so much data coming through. One of the big news events is obviously going to be earnings season kicking off. The banks coming out on Friday. Make sure you're aware of that. We've got big four banks here coming through. They'll tell us a little bit about how the US economy is going, and expect this to be that big catalyst along with the other three that really pushes this market in the direction it chooses to pick, hopefully for a little period of time, mostly just so we can ride those trends. Let's talk about the VIX. This is the one, the fear index. So it makes sense that we've entered those huge amounts of 1% swings. We've seen the VIX spike to the 35 several times this year. And it's really synonymous, the VIX, with lows in markets. You'll notice that maximum fear that we hit over here happened between the 16th of March and the 23rd. That just so happened to be the bottom. Similar times in the past where we've basically bottomed with really high VIX. For some reason, the volatility has been there, but we haven't had an incredible fear capitulation yet. Just remember, VIX over 45 can mean that we're getting close to that fear capitulation level. All yields still sit at the highs ahead of two big bits of news coming out. So we've got the FOMC on Wednesday, the PPI, then we have the inflation number coming out on Thursday. So this is going to be the CPI. And then on Friday, we of course have the earnings coming. And then on the weekend, the 16th, we have the CCP vote. Now, imagine this if things go bad. If we get probably going to get a semi-hardline FOMC saying, yes, we'll do what it takes to beat inflation. I don't think that's new, so maybe that won't do anything. Then we have the inflation number. What if that comes in bad? What if that shows inflation's getting out of control again? The FOMC, the meeting, the Fed will have to do more. That's going to be really bad for the markets. Then Friday, we have that, of course, bank return. We find out what's happening with the potential health of the biggest economy in the world, the US. And on the weekend, we find out whether we have some kind of COVID policy change. If we do, that's super positive. So imagine if we had a weakening CPI, so inflation comes down, we have an okay result from the banks, let's say in line, FOMC is the same as usual, and then we see a CCP switch. Expect yields to drop, and at the same time, we're probably going to see stocks go up. Notice where they are ahead of all these big bits of news, right at the peak. Remember this, guys, if you haven't subscribed to the channel or you haven't been following for a while, these big kind of events, these news events tend to lead to an extreme level being hit by markets, and then that will lead on to a break. So the news event allows a break or a reversal around those extreme levels. All the yields are sitting at highs. US 10-year is also sitting there, 3.947. Still inverted, 5 years sitting very much near the highs. They're all realistically just waiting for these bits of news. And you can tell this week is centered around the news based on the current transactions going on underneath. Here's high yield bonds, still very sick, not new lows yet, but they're coming back down. And in the last 24 hours, we saw some sell-off from high yields. We also saw corporate grade almost actually did make a new low during the session. So we saw corporate grade bonds falling again, and yields didn't really spike that much. So what this is telling us is that there is still a sickness and people are not willing to take the risk on these bonds at this stage. You can see the volume obviously spiking after the bond day off. So yes, some weakness there on the bonds. Now we enter into the dollar index. So the US dollar, is it still the almighty cash is king kind of market at the moment? Well, it broke through that little miniature demand, and actually this led on to a really good trade in gold that we talked about in the previous session. We'll discuss that soon. But now we've come back up and we've pulled back all the way to these extremes. For dollar index players, especially the bears, they want to see a turn right around here. So we'll go into the 15-minute. You can see a little bit of weakness coming in. We'll move this now because we've already seen that demand getting taken out. It's come back now, and what it needs to do is make a little shift up here. We're wanting to see weakness coming from the US dollar and it getting through this little level here. And this will begin basically that turnaround, or continue that turnaround story that we've seen recently. 113.17 needs to be broken below, and then pullback should be met by sell demand. This could be pivotal if you believe stocks are potentially going to rise around here. We need a weak US dollar to make the markets move out of the safe havens, move out of this cash is king kind of scenario. For now though, it's no doubt that we're still mostly in the bullish trend. Of course, we're trying to find those little signs of weakening in the US dollar because it's been such an easy, strong trade recently. We've seen that strong weakness. We're now positioned right around the level where if it's going to find weakness, it does it here. If it doesn't and it shoots through this zone, breaking this supply, could be new time highs. And of course, a lot of people are now calling 120 for the DXY. Let's have a look at gold and how it acted yesterday. So in the previous video, we discussed this being an incredible demand zone. We actually saw it set up pretty nicely into the session. It came down. We saw a little kind of weakness here. We saw a break of that. It pulled back during the session and then went explosive through the session, followed by some massive short sellers coming back in. We still find ourselves at this demand. It's equal realistically to that supply level that we're seeing on the US dollar. We saw a big breakout there. What a great intraday trade. Congrats if you took it. For anyone that's in the private community, you know I discussed this at some length during the start of that video. You can always join the private community as well. 7-day free trial, link in the description down below if you're interested in joining up. So yeah, this was a super important level. It still is. We can see that the buy wicks are still there at the time of recording. Will it hold? If it breaks through to the low, of course, that will probably signal a strong US dollar and complete crumbling across the board. We're probably going to see a weakness in the SP500 at that point and it to move down. Oil's doing its own thing. As we discussed in the previous videos, we broke through that incredible turnaround point here. We didn't get the pullback, which was a little sad face in terms of you usually want to pull back to give yourself better risk reward ratios in technical analysis. And now the market has just moved down. I still maintain really the exact same thing, which is weakness in the oil barrels due to demand destruction. I know OPEC is obviously trying their best to effectively limit supply so that they can get demand up or make it artificially up. And that will work at least temporarily, which it did push. However, it's still looking weak to me. We're getting close now to the previous levels of little demand. So if you're looking for turnaround stories, where it is right now is probably fair to think that there's going to be a little bounce. I'm still thinking though over the long time, my own personal opinion, that oil is probably going to continue to come down. You can tell that that OPEC thing is a little bit of, let's say, desperation in terms of them trying to keep that price up. We move from the oil trade though, or the oil market, to of course Tesla, the Twitter deal. The market problems here, of course, with the whole Twitter deal. The market hit 220 in the previous session. So we actually hit 220 and we saw some bouncing. But more importantly, we've now created some form of structure that we can set alerts around. So you can see here that we have like this 227. We're currently seeing at 215. This has been previous buy wick demand for Tesla. We're in that cheap box, you would call it, based on the previous structural range. So does the market find a bid here? It's going to require that the S&P 500 and the Nasdaq turn from their current demands, which we'll look at soon. But you can really tell that it was struggling around this level, finding buyers and sellers. In the previous session, if you'd bought 220, it did bounce up, significant $4 or $5 a stock, and then just fell straight over. But this is going to be a big clear level in the future for the bulls. If the bulls can get it above this zone, very positive. Otherwise, we don't have a turn signal just yet. We didn't see buying into the close really. only a little bit here, and we haven't seen that turnaround story. But we are at the zone that should be pretty important. Nvidia continued its strong bid from these 2021 lows. We can see here the March of 21 lows. We've come under that a few times now, and you'll notice that it closed a long leg doji, a high, a low, an open, and a close at the same level. What does this mean? Some people call it equilibrium, some people call it indecision. It basically means the market is happy with where it's at for now, and it's waiting for the next catalyst to push us in the direction. Well, why would it be doing that? Because there's so much news coming through. We continue to see strong bids though, getting it above that price. So we talked about that in the previous session. It came in kind of weak, then found instant buyers back to the 118, and then it's supplied off that level coming back down. I think for, let's say Nvidia players and people that are in semis, what you're looking for now is just a market that breaks these highs so it can actually regain some of its strength. It's at the right level, it's at an extreme zone, and it is showing some buyers coming back through at these levels. Let's move over to Microsoft. Microsoft is also pretty much at that extreme zone we discussed a while ago. This is the previous demand, previous resistances over here. We've also got a trend line that sits through the last two lows. So this is the low from 2018 and the low from 2020. As many of you would know, I personally love Microsoft the most out of a lot of these stocks. We're now hitting into that incredibly key level just before all the big news comes out. Little wonder, this is what stocks do. They tend to move to these markets. One of the big indicators that we've used for a while, which is consumer discretionary versus staples, is showing us that markets are again getting a little fearful here. They've pushed it down lower, showing us that they're willing to take more defensive positions at the moment rather than growth. We had seen a big shift from defensive to actually growth over the last couple of months, but I think the markets are getting jittery ahead of the inflation reads, ahead of the FOMC, the CCP, all these big bits of news. The same thing goes for the UK 100, the FTSE. We're at a precipice. We've still got an alert just in case if it falls through this incredible low. And could that be where the watershed moment lies? Unfortunately, if we get through these lows here for the FTSE, it kind of points towards the markets freaking out. And that's where you could see like a really large sell-off down to the 65 or even 6300s on this market. And of course, you'll know that the US market will be breaking new lows. It could all get very serious very fast at these extreme levels. Let's move over to the Nasdaq. What's going on there? Well, the Nasdaq had a bit of a weak session, really. I mean, it ended pretty much around the same place as it really was. And we filled the gap here, so we can now take that gap off. We can remove that. And you can see from the futures market action that it came up and then it found supply and instantly sold off. This is not the market I would have been looking at, though, over the last 24 hours. If we want the Nasdaq to do well, we needed to get past this 11,100. I think the SP 500 shows better catalysts here, but let's also look at the Russell 2000 because this is where we did see stronger bids. Take a look at this. The Russell has often been an early turner. Small caps were favored through the session. We actually saw a very strong pickup in the Russell, and while there was a sell-off, it didn't go to new lows. It actually held a higher low by a considerable amount, and it's moving up at the time of this recording. Could this be the catalyst? I mean, the Russell actually broke the high here, the 1705. Is it showing us that the market is willing to go bullish? Well, the news ultimately will do this, but yeah, it's a very interesting sign there. Let's have a look at the S&P 500. We'll actually just move over here to the real market. You can see a very nasty looking candle here, a low that was wicked off, and then of course a rally that was instantly sold through the session. This now becomes the important point, this 3650. You can clearly tell it was supply because the market bounced and then sold directly off it. And we also know that we have gaps filling from 3744 and this 3585 level has finally been filled. So we can remove this gap that was there. And now we look towards, can we get to these previous supply zones? Let's have a look at the futures market. This is where it gets really interesting. So for anyone that sold, if you sold in here, congratulations. That was a pretty good trade, I think. Not too bad at all. We have the demand side down here. So you can see that we've got a very strong level of previous buyers and they're coming through each time with wicks. So we've got that kind of supply and the demand, and we're stuck in between each one. Alert set each side, guys. This could get wild pretty fast. I'll probably set for a new low here on the S&P 500, but you can see the wicks, the buyers are there, the sellers are there, and they're fighting it out ahead of the big news. Will the FOMC push it through? It might not be that event that pushes it through. It's probably going to be the inflation read that comes out on Thursday. Let's now move over to crypto. We'll have a quick look here at Bitcoin. Is it giving us any inklings to what's going on? Not again, very much information coming out here from Bitcoin. It did make a slightly lower low underneath this point, but it didn't get underneath this one. And you can see a small turnaround, some buyers coming in, a little bit of volume, still well down from where it was. And there's no strong buys here for crypto just yet. 2 hour doesn't tell us much. It just looks like it's kind of still in the downward trend. We've got that previous supply up here. You've probably got like a temporary one that could be positive for it from 19,272. I think the S&P 500 shows the clearest signals here both ways from what we're looking at in the markets. In terms of Twitter, come and follow us over at FX Evolution on Twitter if you haven't already. And for the news events ahead, we have the big bits of information. We've got, of course, on the Wednesday here, we'll just quickly scroll back to go to the 12th. We've got the big PPI coming out 8:30 a.m. New York time. Then we have the FOMC meeting minutes at 2 p.m. New York time on Wednesday. Thursday brings us the inflation. Remember, the market does expect it to drop 8.1 versus 8.3 year on year. Let's see if that does happen. And then we've got core retail sales on Friday. We've got the big banks coming out with their reports, the prelim UOM sentiment. And then October 16th, we have the big CCP party. Will they reverse on the COVID zero policy? Will they make a change? Will it be a positive catalyst to the markets? The Shanghai market, which we will feature in a video coming up soon, so make sure to subscribe, is still getting hurt. So it might be in their best interest to possibly make some changes over there. Thanks so much for watching, guys. If you enjoyed the video, make sure to subscribe, smash that like button, and we'll see you in the next one. Bye for now.